But moving on, we got views with Hughes. Sorry, not from Hughes. Startups globally are also affected by SVB. This will speed up the tech industry decline. The risk officer cared more about woke causes than making sure there is not risk for the company. Let's segue away from the Oscars for a few minutes and get into this SVB thing, because this has been the hot topic of the weekend. Why don't you bring everybody kind of up to speed on this and what's going on?
So this has been brewing. Something like this could potentially be brewing for a long time. I'm very familiar with Silicon Valley Bank because before I left California, I had done well more than 60 acquisitions, mergers, or fundings where I was the auditor for the venture capital or venture finance firm that was giving the money to the tech startups. So I am incredibly well versed. I know this is going to sound egotistical, but I'm incredibly well versed in tech startup funding, not just because I was in Silicon Valley, not just because I went to school in Silicon Valley, but because I had a firm that focused on these types of deals. Silicon Valley Bank was a part of almost every single deal that we looked at from 2006 through the last one that I did was right before the pandemic, 2019. Now, what happened here is relatively straightforward. The bond rate changed. They had exposure. They had a hole in their balance sheet. What I find the easiest way to explain this to somebody, there's lots of ways to analyze this in general. We can talk about bank regulation. Let's talk about the really straightforward point, which has to do with the fact that this is a bank with literally 245 billion of assets. They thought they could raise 2.5 billion to plug up a hole in the balance sheet that represented literally about 1% of what's their stated asset base on their financials, and they couldn't close that. They couldn't close that deal. And when the people that were at that bank as depositors realized that they weren't going to step up and the markets weren't going to step up, and they're trying to plug a hole that had to do with the change in the rates of the interest and how that affected the bonds that they held. Basically, imagine it this way: you have $100 and you are about $1 short of taking care of all your bills, and you needed to raise $1. And when they couldn't raise the $1, all the people with depositors said, holy shit, if they don't have 1 penny out of every dollar in their asset base, because that's the equivalent to 1%, it wasn't 10%, it was 1%. If they don't even have 1% of 100% of their stated asset base and they can't close that deal for whatever reason or another and plug that balance sheet hole, then all of the depositors, the largest depositors, started calling each other and they started pulling their money. People like Peter Thiel got his money out fast and first.
So that basically a run on the bank, right?
That happened on Tuesday and Wednesday. By Thursday, there were dozens upon hundreds of wires requests flying into Silicon Valley Bank starting the beginning of last week. The vast majority of them were processed on Tuesday, Wednesday. By Thursday, 3 o'clock, they stopped all wire processing on all transactions, and the money was stuck. And the vast majority of people that bank here are 3 types of people. 1, venture capitalists that invest in startups. 2, the startups that receive that capital, and which are by and large tech, social media, woke-ass companies by far. And 3rd, the people that work for either Silicon Valley Bank or the venture capitalists or the tech startups that receive this money. So this is something that is, although they're in a variety of other industries, they are in the winery industry. They're very heavy in the high net worth individuals, wineries. They have branches as far as the UK. So this affects tech startups not just in the US. This affects tech startups around the globe. A lot of them that do business in the UK and other foreign countries as well. So this was a domino effect. And what happened is that basically there's a loss of confidence. It was triggered by the bond market. But what I find entertaining is as recently as December, this bank was run by a female CEO. She had plenty of time over the last couple of months to go on ski trips, launch her brand new Latinx initiative, and use some of their own cash in order to fund other woke-ass venture capital firms. I have absolutely zero patience for this. Unfortunately, in my tax and accounting practice, I control what banks my clients use. And I control it by basically I want them to be somewhere that's stable, that's not going to rip them off. I pulled them out of Wells Fargo back in the early 2000s before the financial real estate market crash happened. I pulled them out of Bank of America and Merrill Lynch before that meltdown happened. Right now, I'm not going to say what bank the most of my clients are at, but they're not in regional banks, and none of them are at Silicon Valley Bank. There's actually 2 other banks that are affected by all this. Signature Bank was taken over Sunday morning at 10:30 in the morning in New York. Signature Bank. There's another bank, First Republic Bank, that people were lining up on Saturday outside their offices in Southern California and in the Bay Area. And one of my friends, full disclosure, girlfriend, whatever, ex-girlfriend, is fairly high up at U.S. Bank. And the talk is that there are at least between 2 and 5 other banks that are on the list that this could happen. Now, you know, someone asked me on Twitter, "Hey, does Disney have holdings?" No, no, they don't. You know, Silicon Valley Bank is a reason.
This is like a personal bank, right?
It's primarily for high net worth investors, venture capitalists, tech firms that are startups, and high net worth individuals, like you just said, Tom. That's who is here. And so this morning, I found it incredibly hypocritical to hear Biden even mention small businesses in America, because this administration doesn't give a shit about small business. And I know this because all my clients are business owners. I have 50 clients that run about 180 companies in 4 time zones. And I can see that this government does not give a flying frack about small business in this country at all. And so when they use the word small business is getting bailed out here, no, they mean tech startup companies with these BS valuations that say that their company's worth $1 billion and they haven't even sold a product, but they just have a bunch of views or clicks on whatever website they've got.
If you want a stable bank in the United States, you get one of the Canadian ones, TD or RBC.
Yeah. But here's the thing, though, that this bank by default was stable in a sense, wasn't it, Mike? Because
it was.
From what I've read about this is kind of parallel to Chernobyl in a way. It wasn't one thing that happened there, and it wasn't one thing that happened
Is it
here.
recoverable?
It was multiple things that had to happen all at once in order to produce a bank run that we saw here, because really it was a bank run that did it in. And in order for a bank run to happen in the first place and to be able to topple the bank, a few conditions need to be in place. As you said, the bond market, they were heavily into the bond market. Why were they so heavily into the bond market? Well, that is directly tied in with the interest rate, which again is tied in with inflation. So here you have macroeconomic factors that lie behind it that kind of like set the stage. They had to be at the levels they were in order for this to play out the way that it did with the bank. And yeah, Mike, I'm very glad that you clarified this particular thing about exactly who the clients are here. These aren't your mom and pop businesses for the most part. These are tech startups. These are woker than woker businesses. Like I heard a rumor that one of the clients is the Prince of Canada, you know, the one who wrote his book Wah, on instruction from his wife, Meghan Markle. And he apparently lost millions upon millions of dollars, and so did many other Democrat donors. I thought it was very weird why the current administration would go out and say that, oh, we are going to cover all the losses. No one is going to lose anything here. I was like thinking, that's setting a very weird precedent. You usually have like this cap at $250,000 for a reason. And here you're going to ignore that using taxpayer money to bail out, obviously not mom and pop stores, but now it makes perfect sense why they would do that for this particular bank. I don't think that any other bank, like if a genuine mom and pop bank or store were to lose their everything they have.
Well, if I can, Andre, just because what you're saying is like, because this is what kind of made me worry. Is culture was going off, and I was joking with him. I said, "Quit scaring me like left media." But like I bank through a what you would call a small town bank, right? And you know, because we've dealt with certain things on the other end, that they're not like this big conglomerate bank. So culture kind of had me worried in a sense that I'm like, should I worry because my bank isn't like Wells Fargo, for instance, or some other, you know, institution like that. So that needs to be clarified too. I think you're right, because
yeah. Tom, can I tell you what your worry is? Your
Yes.
worry should be this. This is the one thing you have to worry about. And that is that all of the other clients in your local bank feel the same way as you do, that they start worry. My bank is a little local bank. It has none of these huge things. Maybe I should go and take my money out of this small local bank.
And this is what starts a
Everyone
run.
feels that way. That's a bank run that's going to topple that local bank.
Because there's no bank that usually has the cash assets on hand to handle a run,
none.
basically. Yeah.
None.
Okay, but let's dive into this. And again, I didn't mean to scare you, Tom, and that's kind of not what I was pointing everybody at. One of these
No,
banks,
but I had to crack the joke. But
no,
still,
it's fine. But Mike, one of these banks, or two of these banks, Silvergate, I believe, was also pretty deep into crypto, right?
Yes.
Okay, and they essentially having two of these three banks that are being taken into receivership by the FDIC. I think that's the proper terminology. They are really kind of the go-to bank for these startups, as you mentioned, which means that you have circumstances where a lot of these companies, the biggest concern was meeting payroll. That was the public biggest concern. For a lot of these situations you already outlined, these are fat cat venture capitalists
that fund liberal, woke ass, high tech startups. I just put up on the screen that as recently as the end of December, they put almost 20 million into quote Black, Latinx, and women-led community development financial institutions.
And lest we forget, various influence assignments and money that goes straight back to the Democratic Party via various super PACs. I'm sure there's.
I was going to say, because that wasn't even rumored. I've seen several stories where they flat out had been donating to a lot of these organizations.
Oh, yeah, don't forget BLM and all that other stuff. But it's
as recently as about 4 hours before the FDIC issued the receivership letter, people were getting bonuses between $12,000 and $100,000 per person at this bank, at Silicon Valley Bank. Bonuses were being paid out as recently as within less than 24 hours.
Of course, that's proud tradition. Remember, like this bailout that Obama gave all the huge banks that went under in the 2008 crash, the ones that were too big to fail. Most of that money went straight out in bonuses, or no, if not most, and certainly a very, very big chunk went out in bonuses to the very same people that derailed the entire Western economy. Not a single person went to jail, which they all should have.
That's because of Chuck Schumer convinced Obama not to go after the individuals, but the companies themselves, which was a huge tactical mistake.
Yeah.
But political stuff aside.
And my contact at U.S. Bank, I'm reading off a text that she sent me. This was yesterday at 9:15 at night. It's scary. I have a big feeling that this is what's going to crash the market. Think about it. Then her next text says, once people have access to their accounts, they're going to close accounts and pull money out, not just at these banks, but maybe others.
Yeah.
That is a senior banker at U.S. Bank.
Yeah, there's a lot of people that have that sentiment, including me, as I look at the winds of change in the market. We've watched the S&P, the NASDAQ, and even the Dow start to test the bottom, going down below the 200-point level, swing, I should say. And when you start to see that, you start to pay very close attention because we've already seen downwards trends, specifically with the S&P. And I, like I said, when you start to see trends like that, you start to freak out if you do any kind of chart analysis. So I'm very cautious about all of this now. Let's just put it that way.
I find it fascinating that Andre has been talking about this on this show for almost 2 years. And when he first brought it up almost 2 years ago, that I heard him say this before I even left California, I'm like, Andre is crazy. And I never think Andre is crazy. Well, Andre, #Andre was right.
Three banks.
I think Americans have always had a tenuous relationship with their banks. It was either the bank or the mattress. There's always been a lack of trust. It could be because of the Depression. That still resonates with a lot of people.
Yeah.
Yep.
And And this just proved, and Wells Fargo.
Yeah.
I mean, they should never be in business.
Paul, to be fair, there are other options than bank or your mattress. Because I would never advise anyone what to do. For that, you need to speak with a financial advisor to find out exactly what is right for you. But for those who are in the privileged position where they don't live paycheck to paycheck, good alternatives are commodities, gold, silver, property. All these are alternatives to bank and the mattress.
And if you have sufficient liquidity as the housing market starts to collapse here in the United States, you might have opportunities in your future when it comes to that. So,
I'm putting everything into designer popsicle sticks.
Oh, there you go.
How does that work? Never mind. Don't even tell me.
It's just something that came out of my fevered mind. Don't ask.
So I thought I heard you were going to say something, Chris. Do you have any feelings on this whole banking situation?
Yeah, I think we're fucked. Buy gold and silver. There you go.
I suggest invest in movies
Silver
because
and
it's always
gold.
a solid investment.
Yeah.
Well, you're not you're not 100% wrong, Paul. And I don't mean like actual.
I know.
I mean, I know what you're saying, but look, I mean, in some cases, some of the things that might actually be worth something if things were to crash are not necessarily some of the things you would think. But
No, it's true.
We'll see what happens if this goes any further than this.
Well,
Culture, what did you want to add? Anything more to this? It looks like you just popped up here.
Just that all the signs of stability in governments around the world have been there for a while, and when the $1.99 things start to screw up and you start to not have access to those like we started to during the supply chain issues and everything else, and then you have rampant inflation, you have clear corruption in various areas that can be easily pointed to and have been substantially documented. You're starting to lose even more faith in the institutions that keep all of the stuff running. It's almost as if it's
like everybody. I mean, I'm a capitalist, but the profit taking of some of these companies has been egregious. They've taken government money and then, rather than use the money properly, they use it to buy back their stock.
Mm-hmm. Yeah, and we're starting to see, and Joel Reese points out in the chat something that I wanted to mention is this. There was a recent study done that was published in one of the legitimate news sources. I'm using quotes here, folks. That stated that there was nearly 50% of Americans earning over $100,000 a year that were living paycheck to paycheck.
Right.
That's insanity.
Well, and that's why it's really hard to feel sorry for people that are like in the SVB situation, but it's scary because will it affect the rest of us? That's the bigger problem. When you've got stuff like what Mike just said, that does kind of give you pause because it does make you wonder where we're sitting here when inflation's going off the charts and everything too.
But Andre's statement that this is a dangerous precedent, to set bailing out these banks.
Well, we've seen it before too, but
this is a massive problem because you're back to this too big to fail stuff. And
there's two sides to that actually, because one thing is bailing out banks that honestly, and we know this in retrospect, would have been better off if they had been allowed to fail.
Right.
Would have been better for everyone. But that's not what they're doing right here. They're not bailing out the bank. The bank is being taken over. What they're bailing out are all the customers of this particular bank. My question is then, well, what about the next bank and the bank after that and the bank after that? Because they're not going to be able to afford to do that right away. I just want to highlight a super chat here, which goes to that point. STR Red Wolf says for $5, Andre, per NPR, the full coverage will come from FDIC reserves, not taxpayer money.
That's only partial.
Yeah, that could very well be accurate.
I think somebody said earlier they only cover like 250,000.
250,000.
Yeah, and that's exactly what I mean, because if this administration is then saying that no, we're going to cover all the losses, then all of these losses come from the FDIC reserves, and that's a hell of a lot more than 250,000 per customer. I read somewhere that the average was like 2.2 million, and that's just the average for everyone to get that out of the FDIC reserves. You know what that means? That means there's a lot of people out there who ain't gonna get their 250,000 next time around. That's my worry with this.
So, Mike, do you believe in bank regulations?
Of course I do, but there's this was triggered because this moron that decided the only way that this was uncontrollable is somehow they had third-party options, and the bond price, when the interest rates changed, that triggered the sell. Because from what I read, and I don't know this for sure, but if they merely saw the rates change and then they said, okay, well, we're just going to sell our position and we're just going to say that we need 2.5 billion and we're going to get it covered with a short fundraising capital raise, that's incredibly arrogant and stupid. That's like doing it to yourself. That's promising two people you're going to give them $1,000 and you've only got $500 in the bank. And that was what triggered it, because when people found out on the board and their large depositors that they didn't even have, they couldn't plug a hole of literally the equivalent of $1 out of $100 worth of assets. That's what freaked people out. They're like, well, if they can't cover $1 out of $100 worth of assets and plug that balance sheet hole, well, shit, we better take our money out of this. And that's when the wires started flying. And it's $100,000 insurance per account, up to $250,000 per depositor at any bank. And so what I do with my clients that tend to have a lot of cash, I have them at multiple banks. I have them with $100,000. I have a client. I'll give you an example. The guy that does work for 24 Hour Fitness, he's at Chase, he's at Bank of America, and he's now going to First Citizens Bank, where he's opened up his third set of accounts. And no time does he have any more than 100,000 in any one of his accounts, and he's got probably 7 or 8 accounts at 3 banks.
That's smart.
All right. Well, this will be definitely something I'm sure we'll be talking about in the future as it unfolds, especially if it has anything to do with entertainment news, as some of these people I'm sure are in the entertainment sphere. I'm sure things will come out as we learn more about this situation, but we are going to be losing some panelists soon, so let's get to some super chats here. You guys have been extremely generous this morning. Thank you so much for that. I can eat later.
Stop, you're making me laugh. We have more super chats.
Yeah.
Hey, Jackson,
and here's one for Mike, actually.
Says, I'm a few minutes behind, but what exactly has Andre been costing for the last 2 years? Especially for Mike to think it was crazy and improbable. And funnily enough, I think probably after you sent this, you would have gotten to the portion where Mikey brought this very subject.
Andre said literally about 2 years ago, almost exactly, I remember because it was before I left California, that he thought that there would be runs on U.S. banks at some point in time based upon what he was seeing internationally in the global economy. And at the time, I thought that was crazy, because I just couldn't envision any set of circumstances with that happening. Hashtag Andre was right.
Yeah. How about like 2 banks in a day?
Dude, you got, actually technically, because one was on Sunday. Yeah, you got it.
Yeah.
And there are more to come, people. Don't be surprised. I think there's between 1 and 5 more to come.
Yeah. Yeah, no, I think so too. This isn't over, because stuff like this happens. It doesn't happen in isolation, and it takes a very specific set of circumstances for it to happen. Like, you have to have like 3, 4, 5 things that happen all at once for it to happen, but 4 of those are there now. And the only thing you need right now is for people to be worried and take out their money. But all of the other things, that's kind of like what I saw internationally, that we are actually in like, for the last 2 years, I've been saying that we are in something of a live action remake of the 1930s depression, only set in modern times, because there are some of the same trends that I see repeating. So it helps to know your history. And then on a long enough time scale, you'll be right. So what I said 2 years ago may have sounded crazy then, but the signs were there. It just took some time for them to spring into effect. And lo and behold,
and as Andre was right. Hashtag Andre was right. There you go.